And there hasn't been a louder cheerleader of Slack than Shopify. We already talked about how Shopify just absolutely loves Slack, and it's really created a lot of exposure for them, and they've been seeing some significant growth. It's the beginning of September, and you know what that means. It's the top 5 stocks that I am watching this month. And I love this list that I've created. I have something for everybody: higher price stocks, lower price stocks. And I think that you guys are really going to love this list. So let's just get on into it. And we're going to talk about Disney first. Now, there are some things to love about Disney right now and things to kind of be worried or concerned about. Let's talk about the things to be concerned about first. And that is that the parks aren't still fully open at this point in time. And so that is a huge concern because the parks were the largest revenue driver for Disney. But what has actually kept them afloat? Disney Plus. Disney Plus has actually been able to keep Disney afloat and really kind of make up for a lot of those lost revenues. We've seen 60 million plus new subscribers, which was a goal for them by 2024, and they've accomplished that in less than a year. That is absolutely insane. So my thing about Disney is this: Disney also has created the NBA bubble here, which has also created a lot of tension, which tells me that people are going to be confident about their safety and everything when they go back to these parks once they open fully. Not only that, but you combine the fact that Disney Plus has grown so much and then add their largest revenue driver yet again to the company, and this is going to be such a huge mover for Disney. Once they start to really get those parks back into place and 100% capacity, it's going to be a massive move for Disney. Before the Rona, we saw this up at $150 per share, and I think that we see this at $200 once things are fully up and running once again. So in my opinion, I think it's going to be a really good one to buy and hold on to, not only for the month of September, but going into the end of the year and beyond. I think Disney is going to be an absolute monster. And so what I'm going to do now is I'm going to actually share my screen with you and show you each individual stock from a buy-sell standpoint, where I think is a fair price. And we're going to go ahead and look at this on Webull. So as some of you may know, I actually started a small account challenge on Webull. And just to kind of update you guys, you all know that I've actually started to create a small account challenge with Webull, and I've been sharing it with you guys. I just started it a little over a week ago. You can see that I started with $5,000. I'm up $725 in about 7 days time. So pretty good so far. I actually just cracked over $6,000, and then we had a little bit of a sell-off today, but was able to add to quite a few things, and I think that adding on the dip's probably going to end up paying off here. But getting back to Disney, I think that this is going to be an area right here at 133 that I'm looking to potentially add to. And it's getting right down there to the support level that I'm looking for. I want to start to see some buying return here, but I think that this is really crucial. If we go back out to the 4-hour chart, we can see that breaking up over this 134 area was really, really important for Disney, because it had tested this area several times previously, and then finally was able to make the move above it. So I think that because this was such a stiff resistance for it, that now becomes a really solid support, and that if Disney can hold above 133, 132 here, that I think this is going to be a really strong start for Disney, and why I think that it's going to be a really good opportunity to grab some here, because I think this continues to go higher. All right, so the second one on this list is actually going to be really interesting, and you may or may not have heard of this company or this stock, but it's going to be Old Dominion. Ticker symbol ODFL is what that stock is, and it's going to be interesting to see how this plays out. What is Old Dominion? Some of you might not be familiar. It is a trucking company. They do a lot of shipping, and this has a lot to do with the supply chain, which has been disrupted through the Rona. And I think that Old Dominion continues to move up here. It's moved up a ton, but I think a lot of that has been because of the amazing amount of institutional and inside investors here. Remember when I talked about MGM, Stitch Fix, and Williams-Sonoma back in April, when I talked about the amount of insider buying that was going on with those companies, and I felt as if that was going to continue to run because of it? Well, since then, Stitch Fix has more than doubled. MGM is now back up over almost to $24 from the $12 call out that I put back then. And Williams-Sonoma went from $37 a share to nearly $100 a share this past week, which have been incredible moves. And so I think that Old Dominion could end up continuing here as well, despite the fact that it's gone up quite a bit. Insiders and institutional investors make up 89% of the issued shares here, which is absolutely incredible, which means that there's only 11% worth of retail investors, which tells me that there's probably not a lot of people aware of what Old Dominion is doing and where they are headed. And in my opinion, this is geared towards more of a recovery type stock and has tons of room to run here. And to show you what I mean here, you guys can see that this has gone up quite a bit, since the crash, and it just really has continued to roll. You guys know that I'm a huge fan of stocks that not only survive through the dip and the recession, but thrive through it, and Old Dominion has proven that it can do just that. We've seen a pullback here just today, coming on the 4-hour chart around 204, and I think that this is going to start to become a really, really good solid support for it right at the $200 range. The reason why I think this is because, again, with all the insider buying and institutional investors here, there's a lot of holding this stock. So as retail starts to come in, the shares are going to become more and more scarce. We'll start to see this continue to climb. So as far as areas that could be reasonable to buy this at, right here is where it's sitting at today as of this recording at 204. Could be a good spot to scoop some up. I also see 200 even being a really solid support for it if it continues to dip from there. And then again, if by some chance we see this down below $200 a share, I like it at the support at 197 if we can see some buying return there as well. I like Old Dominion a lot. I think this continues quite a bit. This is one that I would see probably getting to around $250 a share. Could be by the end of the year. We don't have a whole lot of time left for 2020, but I think that as we start to continue to recover and getting into those recovery type stocks, that Old Dominion is just going to be one of those ones like Walmart and Costco that not only thrived during the Rona, but are going to actually continue to thrive after it. The next one here is going to be Tesla. And what else can I say about Tesla that I haven't already? Now, some people might make an argument as to why you shouldn't be investing in Tesla. And some of those are that it's just too overpriced. It's gone up 428% just this year in 2020. And if you guys might recall, I put out a video right on January 1st of my top 3 stocks that are going to be worth investing in for the next decade. Tesla was one of them. And now it's gone up 428%. Hey, Steve, can I get a hell yeah for that one?
Oh, yeah.
Thanks, man. All right, look, yes, it's gone up a ton, but it doesn't mean that it can't keep going. What's going to continue this kind of momentum? Well, we have a catalyst coming up in September, and that is Battery Day. September 22nd is the scheduled date for Battery Day, and this is going to be a really crucial and important time for Tesla. And it's not just because of the rumored 1 million mile battery that could last for the duration of a vehicle, which would be unheard of, right? That is a huge catalyst in and of itself. But I think that there's other things that are going to come about in Battery Day that just haven't been revealed yet. Elon does an incredible job of surprising people with things that they just weren't expecting. We've seen that with previous reveals, such as the semi-truck and the Tesla Roadster, a lot of other things. And I think Battery Day is going to be just like those reveals as well. Not only that, but Tesla's officially gone through its split, which now makes it more affordable for retail investors who have smaller accounts. And we've already seen a surge in buying since that split has taken place, and I think that we only continue to see that. Not only that, but on the vehicle side of things, they are best in class, and they are about 7 to 10 years ahead as far as their technology is concerned, and so they really are in a class by themselves. Lastly here, the potential inclusion of the S&P 500 is going to be a huge catalyst for Tesla, and I think that it actually is going to become. We've seen some signs here, especially with the $5 billion offering, which a lot of people were scared of, but I think that they're not reading into this. I think that they probably ended up having to do this offering in order to be able to qualify to be included into the S&P, and this is just another step in that direction. Once it happens, watch out. I think Tesla is going to be a very clear buy for the foreseeable future. You guys know how much I love Tesla at this point. Looking at the chart as of today, I actually was able to add to a little bit more Tesla with my small account. You guys can see here that I got 6 shares. I actually ended up taking some profits after the split because it just went absolutely berserk, and I knew that there was going to be some sort of pullback, so I ended up selling some Tesla, locked in some profit, and now I'm back in. Only down about $50 on this thing, so I think that it was a really good dip add to get back down here in the mid 400s, and so this is actually looking like a really solid support here right around 435. And then if this can break back up over 479 and then up above 500, we're going to see some fireworks with Tesla. And it's only a matter of time before this happens. It's not if, but when it actually takes place. All right, so this next one here that I think seriously gets overlooked, but is poised to have a really good month is Snapchat. They have earnings coming up this month, and I think they do crush them. They came close to being profitable last quarter, and I think that they could even come to, if not super close, I think they end up becoming profitable in this quarter. And the reason is because of the amount of demand that we've seen in ad revenue with Facebook, Google, a lot of the other bigger brothers and sisters of Snapchat. And I think that this is going to be one that actually really makes a huge run after earnings, and maybe even leading up to earnings. And I'll share my screen with you as well, and kind of give you an opinion on that in just a second. But there are some fundamental things that we want to pay attention here as far as Snap is concerned. They have a lot of things in the work here, and with potential partnerships with Disney, the NBA, the NFL, NBC, and among others, this is going to be a huge component of Snapchat moving forward, especially from the content creation side. That in of itself is huge, but I think the biggest part of Snap and what sets them apart from everybody else is their augmented reality technology. With Bitmoji TV, they can put their own selves as cartoon characters and put themselves in augmented reality with the likes of McDonald's, Coke, among others. This is going to be really big for them. Using their AR technology, they've been able to partner with companies such as Gucci so that you can actually try on their products in augmented reality. And here's the final thing that I like about Snapchat, and that is their user base. According to Pew Research, Snapchat has been able to reach 90% of 14 to 24-year-olds. That is incredible. And that 73% of Americans ages between 18 and 24 have reported using Snapchat. The company has reported that anywhere between 300 and 500,000 customers are going to be turning 18 this year. And it's going to be, this exposure is just going to be incredible for anybody looking to do advertising with Snap. And it kind of figures here as I'm sharing my screen with you that this starts to move. I mean, what can I say about it? I do think that we probably end up seeing a pullback from Snapchat, but this was an area that I was looking for a resistance break in order to make an entry, but it is what it is. I'm sure that there'll be other opportunities. So now that this is broken over a resistance of 23.18 and now sitting currently as of this recording at 23.41, this is an area that I'm looking for a pullback now as a new support. Old resistances become new supports. And so this is now going to be an area that I'm looking for a potential entry. If we can see a bounce off of this spot here, that's where I'll probably start to scale in on Snap. I also like this if it can't hold here, if it somehow comes back down to around 22.50, I like that as well. But man, doesn't it figure? It doesn't it figure. I missed my entry on this one, but again, guys, I think that this continues to go higher. I think we see $25 or more on this leading up into earnings, and then beyond that, if they beat earnings, we could see a move as high as $30 on Snapchat. It can happen. It is possible, and I think that we do see that by the end of the year. All right, before we get to this last stock here, I want to take some time out to invite you over to the Chaos Crew. By clicking the join button next to subscribe, you will get a daily watch list from me, private live streams, as well as my publicly traded portfolio on a daily basis. You want to see what I bought and sold that day? You get to see that if you join the Chaos Crew. So if you click the join button, it's really cheap. I think that it pays for itself every single month. And if that's something that you would be interested in, I would love to see you there. Okay, so this last top stock of September is going to be Slack, or ticker symbol WORK. Now, it's no secret that you guys know that I have loved Slack since the springtime, and I think that this is still one that is underappreciated and overlooked. This is one that I think that we actually do see $40 to $50 per share by the end of the year, and that is because earnings are coming up on this thing, and I think that they crush them. Slack is a workplace collaboration software that I think will actually end up making emails obsolete. They are set to report at a loss of 3 to 4 cents per share this quarter, and I'm willing to bet that they actually come in cash positive. And wouldn't that be a story for Slack? Slack is a direct benefactor of remote work, and you guys know how much remote work stocks have been moving. We've already seen incredible moves from Zoom, and if you're looking for the next Zoom, Slack, in my opinion, is it. They've experienced some insane growth in helping employees communicate more efficiently, and there hasn't been a louder cheerleader of Slack than Shopify. We already talked about how Shopify just absolutely loves Slack, and it's really created a lot of exposure for them, and they've been seeing some significant growth. Now, a lot of people do make the argument that Slack faces a lot of stiff competition here with the likes of Microsoft, Facebook, trying to get into the same type of space. But what did we see with Zoom? Zoom specializes in one thing, and they do it extremely well. And when companies like Facebook and Microsoft try to copycat this and try to do something similar, it just doesn't compare because it's not what they specialize in. And this is where I think Slack really shines. Slack specializes in helping employees communicate faster and more efficiently. And so I think that this is going to be the wave of the future. There's a lot of pushback here on older employees that are used to the way of doing things, but I think as the younger generation comes in, that Slack is going to be here to stay. Not only that, but like I said before, remote work is here to stay, whether the Rona has a vaccine or not. And I think Slack is, again, a direct benefactor. We've seen companies like Zoom, DocuSign, CrowdStrike, and Fastly grow significantly, and Slack is going to be in that conversation too. And let's go ahead and take a look here at the chart as well to determine some areas that would be of fair value. In my opinion, right now, it's holding pretty well above $33 a share, as we've seen a really strong move from this, and I think that we continue to see that as we lead into earnings next week. Looking at this, you can see that I've already started to scale myself in, and I plan to scale myself in even further on work as this continues to move. I'm looking for breaks over $35 a share, and we can see that it has a high now of $35.50. Those are two key areas of resistance that I'm looking for a break for a nice continuation on work. If this continues to hover at this support level, or if it even breaks this support, I'm looking for a potential dip grab here at around $32.34, because I do think that we will see some more continued buying as we get closer and closer to earnings. And that's going to do it for this video, guys. If you liked this one, be sure to click on one of these, as you will like those as well. Please like and subscribe. As always, folks, I will see you all before the bell, and B Smith is out.